Hi, I'm Kate. I'm the editor of What Mortgage, and I'm here today with David Jackson, who is the owner and founder of Prestige Private Finance, and we're going to talk about whether it's a good time to buy a house. Hello, David. Thank you for coming in and joining us today.
Not a problem. Thanks for inviting me.
Yeah, we're going to be answering the multi-million-dollar question that's on everyone's lips.
Yep.
But first of all, can you tell us a little bit about yourself, what you do, your job, and how you help people?
David Jackson. I'm the owner of Prestige Private Finance. Prestige, I incorporated in 2014 now, so it's going to be our 10th anniversary this year.
Congratulations.
Can't believe it, I know. But yeah, I've been in the industry, mortgage industry, since 2002, so 22 years it will be I've been around. But I started advising in 2003, so yeah, it'll be 21 years I've been advising. Used to work for a company called Alexander Hall. I was their man and boy until going off and setting up Prestige in 2014.
Oh, wow.
Here I am now.
So you really know your stuff then?
I've been around a bit, yeah.
And this common question we're going to dig into, is it a good time to buy a home? Is this a question you've been getting asked all the time in these 21 years, or is it something that's come up even more now?
All the time.
Okay.
The simple answer, is it a good time to buy? Yes. When's the best time to buy? Yesterday. A lot of people spend a lot of time focusing on the market, looking at the trends, looking at how house prices are moving. But ultimately, having done the job been advising for over 20 years, those people that have gotten on the housing ladder as early as possible are the ones that benefited. The higher you are up the chain, the better things are in the future. So if you can buy, you should buy. And we've all got to live somewhere. Yeah. So you either pay rent to someone else, or you sit there waiting for the market to move, and you can miss a chance. And then the market moves very quickly. And to be honest, the most important thing really is to find the property that is most suitable for you.
So you're saying that, the first step really is to work out maybe what's happening with your life first, perhaps,
yeah.
And rather than looking at what's going on in the market, maybe, because I think this is a big question at the moment because of what's happening with interest rates. So obviously there's lots of speculation going around that interest rates might go down in June or August.
Yep.
Maybe people are hoping to wait until they do go down. Is that a good plan?
I always say, again, the most important thing is the property. If you're thinking about buying, there's an intent there. You're thinking about doing it. It's whether you can transact. If you can transact, then you've got to find the right place. Looking at interest rates, looking at the mortgage rates, even though it's the world I work in, I always think it's secondary. The most important thing is the property. So it's putting yourself in a position to be able to transact and being able to buy. And then it's really about where you're going to live, the type of property, all the most important things. Because yes, I can arrange the mortgage, but you've got to live in the property. You've got to find a property that's right for you. And ultimately, you will have to compromise. We all want to live in a multi-million-pound mansion, but it's not going to happen. So you're either going to compromise on location, compromise on price, or compromise on the space you're going to buy at. Somewhere along the line, you're going to have to make a decision. But the most important thing to start with is put yourself in that position to do it. If you find the right place, then it's the right time. Or you pay rent to someone else, and it'll cost you a lot more renting, and it will have a mortgage. So, yes, obviously it is important about the cost of the mortgage and looking at where interest rates are going to move and mortgage rates, but it's about being able to transact. If you hold off finding the right property because you're looking at the base rate, you might miss the opportunity. So, the most important thing to me is the property.
Yeah, sure. That's really interesting. And if somebody was a first-time buyer listening to this, for example, and they weren't sure when, what position they should be in before they started to buy in terms of their finances, what would you say to them?
3 things. First off is affordability. Second off is income. Third is deposit.
Yeah.
One of those 3 factors will dictate what you can actually achieve. So obviously, I've been doing the job for 20 years. I remember the days of 100%, 125% mortgages. So, of course, unless you've got a deposit, you're not going to be able to transact. Secondly, based on your income, will dictate how much you can actually borrow. Yeah. So if you earn X amount, you'll be able to borrow a multiple of that amount, and that will dictate your mortgage ability. And then, of course, the mortgage ability is also dictated by your affordability. So if you've gone out and taken on car loans, loads of debt and what have you, yes, an income multiple might work to get you up to X amount, but if the affordability isn't there, that might reduce your ability to actually borrow the money. So between the three factors, especially when I'm speaking to clients, they're the 3 points I'll go through to make sure set budgets, set expectation to actually then allow the first time buyer or home mover or whatever to actually understand what they can achieve and then go out and actually look at what's achievable on the market, location, property, and ultimately put them in a position to transact.
Sure. And what kind of deposit would you advise a first time buyer to have?
Well, buying cash. I mean, look, there are mortgages out there where you've got the 99%. Well, the 99% is basically a minimum of £5,000 and you have to set a level of criteria. But a 5% deposit is the minimum a lot of banks look at. And of course, if you can, the mortgage market works at 5% increments. So 90%, 75%, 60%. The more deposit you've got, the better options you're going to be there available for you, and also more lenders will be open-minded the bigger deposit you've got. But the hard thing is actually having the deposit in the first place. So if you've got a 5% deposit, you're able to move forward. So the most important thing is to have the deposit.
Yeah, so 5% absolute minimum in terms of that deposit, would you say?
Yes, but there
Okay.
are a few schemes out there that we might be able to do, but in general, that's what you should be looking at as a minimum, I would say.
Yeah. And in terms of home movers, maybe people who've already had one home and they're looking to move now for whatever reason, what kind of position and what sort of finances should they have in place ready to make their move?
The home mover, I guess, there's a lot of factors the same to the first time buyer we just spoke about, but the difference with a home mover is they own a property and they've actually got to do a bit of different forward planning. They've got to understand what their current property is worth. They've got to understand the actual conditions of the mortgage they've currently got. Is it portable? Are there penalties? How much equity is in the property? And ultimately, yes, you could go see an estate agent. Let's be honest, estate agents are obviously going to look at very positive on the value of the property. But the reality is we don't know how much they're going to sell the property for until an offer is accepted, which then can dictate how much equity they've got. And also we need to then look at what savings, and then ultimately the same sort of assessment we just spoke about with the first time buyer, deposit, income and affordability. But there's just more baggage in the chain. But unlike a first time buyer, they've been through the process before, so they've got some more experience. They've just got to deal with both sides of the coin now. It will be their first time, potentially be their first time selling a property. So they've got different dynamics there, dealing with the estate agent, getting their property ready to be sold, and obviously trying to sell their property at the same time, trying to buy a property, which is actually probably the hardest thing. You know, you could actually go out and find somewhere you want to buy, but you haven't got a buyer for yours, or you could actually get a buyer on yours and still be waiting to find the right property for you and put yourself in a bit of pressure to actually move. So it's the balancing act. It's probably more groundwork, and preparation from a mortgage perspective actually is still pretty much the same. But you got to think about your own situation and where you want to buy, where, you know, generally people might be moving for schools and stuff like that in the area and might have set requirements. So yeah, it's just trying to balance both sides of the equation.
Yeah, I'm just thinking that it's just a lot to think about. So adding on all the stresses of, you know, the economy and interest rates and all that, it's mind blowing, isn't it? It just highlights why it's so important to focus on yourself and, you know, what you want and what you're going to do, doesn't it?
Yeah, certainly.
Yeah. I was going to ask you actually, going back to maybe mainly first time buyers, but, you know, this might be helpful for people moving as well. What kind of preparations should people be making, you know, once they've realised that they've got the income, you know, they've got the affordability, the deposits in place? What should be the next step for them? What should they be putting into place to prepare for the mortgage or getting a mortgage?
Well, speaking to the right advisor.
Okay.
I mean, obviously, the estate agents will speak to you about properties. For being mortgage ready, it's essential to speak to the right people. Okay. I mean, like anything in life, there's good doctors, there's bad doctors. There's those that will take you down a process and not actually give you proper good on total advice and actually help you. You want to be speaking to a broker that will, at the outset, set your expectations, but also be an ear when you have questions. You know, how many times have I had someone have an offer accepted and call me and say, am I doing the right thing? and then you've got to break it down from a mortgage perspective, financial perspective as to what they are doing, give them that helping hand. So it is preparing to take that move. For a first-time buyer, it's the first time they're ever going to do it again, first time they're going to do it. So yes, affordability. So preparing things like that. So they could have, let's be honest, so someone that's buying their first property living at home might be spending more on their social life and their holidays and stuff like that they won't do in the future. So it's actually setting expectations to go, right, when you do this, this is the impact on your life. You're going to have to sustain this payment. And the same will happen if they're renting anyway, just that you could go and sign up for a rental agreement very easily. So being mortgage ready, making sure that your outgoings are in check versus your incoming. So when it comes to assessment, especially if you are transaction with a 5% deposit, lenders are going to look at you a lot more than what they would do if you're coming to me with half the money. The lenders sometimes will be like, yeah, fine, give me a couple of pay slips and we'll approve the mortgage. But 95%, they're going to look through all your bank statements, they're going to want a track record, they're going to want to be comfortable because you're high risk to the bank at 95% loan to value. The market does move. All the bank cares about is their security and getting their money back if it all went wrong. So you're going to need to be presented in the best light possible. So making sure that your bank statements are in check, condition yourself to what will happen in the future. If you do have any debts that you can pay off, make sure that they're out of the way. And ultimately, don't be taking out any other car loans, credit cards in that meantime. Have a credit card and utilise it, but don't be taking on extra debt that could affect your ability to buy the property you want and borrow the money you need.
Yeah, so it's just some sensible spending, really, keeping within your...
Yeah, it's conditioning yourself, isn't it, really? Because this is what is going to happen. And again, you need to be able to show responsibility and also show you can afford the mortgage, the commitment you're going to take on. And then ultimately, it's your life and it's going to impact you. You need to condition yourself to it. So I would say the sooner you get used to it and obviously build up it'll help you build up savings in the meantime. If you're living at home, for example, and hopefully get a better mortgage rate because your deposit's a bit higher.
Yeah. So what do you think is going to happen to mortgage rates in the next year?
Well, that's the crystal ball time. And if anything, the last 18 months has taught me the crystal ball has gone a bit weird after Liz and Kwasi and last summer. Look, expectations base rate at some point is going to go down. Inflation is nearly at target, but there's external pressures elsewhere. The Bank of England are obviously being cautious of any movement downwards. The noises are it will come down, but the money markets, they actually move before the base rate moves. So I do have a lot of clients who think they're going to wait for the base rate to move. Well, the money markets have already priced in where they think the market's going to be 3 to 8 weeks beforehand. So at some point, the things will tip and who knows what will happen in the election. So I like to believe the mortgage rates will get better, but you tend to find the saying we've got in our company especially is up like a rocket, down like a feather. Lenders are very quick to put their rates up if they see any sign of panic, but not as quick to put them down again. So what you tend to find is a softening effect with rates. So apart from actually the start of this year where we actually saw rates come down quite quickly at the start of the year, but that's because the money markets were priced a lot lower in December. It took them a bit of time. And what you tend to find that brings the rates down is actually competition with lenders. So when the market goes a bit quiet, lenders start chipping away at each other trying to hit their targets. And that's what brings the settling effect on the actual mortgage rates you see out there. And the election will cause a bit of a slackening in the market. So we might see some rates start to fall a bit because of that. And in the summer, traditionally, you get a loosening of rates because of that type of effect.
Yep.
However, all it takes some day to go the wrong way and a spike to happen. So I'm positive that we'll see better rates, but all I can ever do from an advice point of view is tell you what the situation is today. So if you're watching this in 2 months' time, what I'm telling you today is completely wrong. And in 2 months, who knows where things will be.
Yeah, we'll tune in to see what the predictions
exactly.
are. It's interesting, though, isn't it? Because I think a lot of us sort of automatically assume that the interest rate goes up or down, and then the next day the lenders will change their pricing. And obviously that happens with tracker mortgages, but with fixed rates, which are the most popular, it's not really the case, is it? It's not always, it doesn't always follow suit. So it's a good idea for people, I guess, isn't it, just to keep, if they're thinking of moving or, buying their first home, just to keep in touch with what's happening in the news and speak to their broker.
Yeah, I mean, speaking to the broker, that's why it's essential. I mean, I'm immersed in the world, so I see the movements going on all the time. We even look at the swap rates, which is the cost of money, which where the banks get the money from, and that's where the pricing of the fixed rates come in, because it's the guys in the city gambling as to what they think is going to happen. That's why the actual rates move beforehand. It doesn't move when the base rate, they've already pretty much worked out what's going to happen. But by speaking to a broker who's going to be responsive, actually answer the questions and give you real-time advice, it's because they'll see how the rates are moving constantly. They'll be able to advise you. But like I said, I can only apply for a rate on the day you have an offer accepted, but at least I could guide you across and set expectation. And if you are remortgaging, sort of sitting on the fence a bit, when rates do move, we'll be on the phone to you, telling you straight away that you need to be doing something.
Oh, that's good.
But also, you always best start to reserve a rate as soon as you can if you are in the remortgage sphere.
Yeah, it's really great advice. And do you know how property prices might pay out if the election and potential interest rate falls?
Well, obviously, all those things. Well, interest rate reductions will be positive. I mean, death, divorce, marriage, children always keep the property market moving. The problem is sometimes the cog gets stuck, and then it goes like that, and then it flies again. So, with a shortage of housing in the UK, there's always demand there. But like with any market, there's fluctuations with it. So, what will happen in the election is, and the summertime, there may be a slacking off. And then what happens is September happens and you might get more things start to happen in the property market. But unlike with the stock market, with shares and things like that, where you can actually see real-time values, property is illiquid, equity-rich cash poor, as we always say. You're never going to get a real-time feel or data out there as to where the housing market, how it's performing. It's always a 6-month time lag. The only thing you can see is how quick properties are going on the market and how quickly they're going under offer. But what will happen is, people will sort of sit on their hands a bit for the next few weeks, even though it should be a given, but who knows? And then, if the government do then have a full majority, you'll probably see a more interest in the property market. It happened in 2019 when Boris got his majority. At the start of 2020, the property market came out the tracks very quickly. In January and February, the amount of business going on was huge. And then COVID froze the market and then caused another build-up. And then in June, July, when it got unleashed, it just came flying out, and then the stamp duty cuts came in as well. But a lot of it was because of Brexit, Theresa May, getting a hung parliament. It was only back in 2019. We actually had some certainty for a couple of months before the world changed again. So that's the sort of reaction that the property market can have. And we've all got to live somewhere, as I say.
Absolutely.
And it's ever changing.
Yeah. Oh, well, it will be interesting to see what happens over the next few weeks and months. Yep. I'm sure lots to go on. You might have to come back and talk to us about it afterwards.
More than happy to.
Finally, we always ask every guest who comes in for our podcast for a top tip to give our listeners. Have you got one? Top financial tip?
Well, I guess I spend day in, day out looking at bank statements. So, I think, as I said earlier, make sure more is coming into the bank, into your bank than going out. And also utilisation of credit cards. There are some nice little freebies with credit cards, as long as you use them right. So, as long as you set up a direct debit to have the whole balance cleared on a monthly basis and ultimately factor it into your ingoes and outgoings, use your credit card and get some points, get some obvious points and things like that, which could get you the odd free flight during the year and stuff like that. You get interest-free sort of periods and stuff like that. But I'd certainly say utilisation of credit cards is probably a nice little win to get a couple of little bonuses here and there. And also, from a mortgage perspective, it actually shows that you can actually handle debt. It helps your credit score, and hopefully at the same time get a few points.
Yeah. Great tip. Good credit card use then, if you want to be...
Correct credit card use, I think.
Correct credit card use. Okay. Oh, well, look, thank you ever so much, David, for joining us. This will be so helpful to so many people, I know. Just finally, how can people get in touch with you if they are interested in using your services?
Our website is www.prestigepf.co.uk. All our contact details are on there, all the team are on there. So any questions, anything we can help, feel free to reach out, and we'll be more than happy to help.
Oh, wonderful. Thank you, David.
Thank you.